closing up pretty substantially above the 1 day implied move, about 50 points higher than I expected. I thought we would get hung up a little bit more at 6,300, but getting those sold puts back in the money or out of the money gave the bulls a pretty substantial leg up. This puts us right at around the 63.57 ES resistance. The first leg of a reversal would be either the retest at 63.74 or the retest at the long-term trend. And that's probably where I would look for like a point of failure. So I kind of expect this to keep moving up in the overnight session as we approach the ISM data. Bulls try to get this back into a positive gamma environment before the data print so that the market maker can absorb some of their losses if they have to close. Dollar up, but just a tiny bit today. Yields still pushing to the downside everywhere except the very interest rate sensitive 2 year. Correlation turned down for most of the day, but then continued declining correlation started to slow after about 11 o'clock. Just not adding a lot more short put interests. I mean, adding it, but at a slower pace. Precious metals up today, which is a little weird given the bump in Dixie, but it's probably just due to carryover uncertainty from last week. Oil down, 181 points, which is pretty substantial, which left the drop in energy leaving broad commodities down overall. We had a bit of a drop off in 3 month correlation, but no big spike in bond volatility yet, which is surprising, especially given the move in bond vol on Friday. Like, move is still actually pretty flat. Forward yield on volatility moved down just a bit more into the end of the day to negative 2.87%. Leverage on the carry trade, both in the front end and the back, dropping off pretty substantially. We're down from like 9x to almost 8x on the 10 year, and from like 7.2 down to 6.6 on the 6 month. So the risk off there is kind of interesting, but probably coincides with expected moves in Fed rate cuts, which we'll get to in a second. Skews continuing to move up, so there's at least slightly less out of the money put demand. Breadth looks like dog, but this is from Friday. So we'll have to see how things are covered. It does look like obviously Russell outperformed, which is kind of what I wrote last night. But NQ also recovering very sharply. Dow underperforming, which is a little weird. You'd think the snapback in Dow would be a little bit stronger, or at least in line with the S&P. But I would expect that stocks over their 20-day moving average is probably increased. Maybe not too much for the 50-day moving average. And then the drop off in the 200 stocks below the 200-day moving average, in line with the rest, is interesting. But because of the improvements in breadth, that will probably recover best. VIX cash VIX correlation fell, but not towards the end of the day, actually not as bad as it was earlier. I think it was around 78% earlier. So a little bit less short volatility demand as price climbed. Fed fund future expectations still moving up. I think we're doing December, June now. And June pricing in almost 4 cuts, or just under zero point 0.9. January, oh sorry, March. We're doing March, June. March at almost at 3 expected rate cuts, and Jan almost at 0.5. So, I mean, the market still baking in a very, without any data, this isn't going to change much, but baking in a very high chance of like 87 something percent on the September meeting, and then like 50 points by the end of the year. So aggressively pricing in Fed cuts, and then the bear steepener pulling back about 5% off of the 10 2 year spread pulling back. I guess this is technically a bull steepener, at least. Well, some of that pulled back today, and we bounced back up and retested that upper trend on SPX. We did not close the gap yet, but we're very close to it. That gap close and test, I think, is pretty important for seeing if we get a rejection on this bounce. that carried us up over the 30 EMA. If we fall back below the 30 EMA, that blue line there, that's probably pretty bad. But I would still want to see 6201 lost fully to confirm more 6201, and then like 6173 where the gap closes from like July open. So if that gets filled, then we have like a real like breakdown correction potentially on our hands. Until then, still choppy, slight bullish bias in the short term. Although in the longer term, this could turn bearish. And I think that's about it. Sectors, pretty much everything moving up besides Amazon and ExxonMobil. Adobe and Burke didn't do too great, but Burke hasn't been doing too well in risk on situations. And that's it. Yeah. So thank you guys so much for tuning in, and I will see you tomorrow. Have a good day.